What's up, investors? Back again. This time we're taking a look at AT&T, ticker symbol T. Now, full disclosure, I do own some shares of AT&T, but it's not going to affect how I analyze this company. In fact, sometimes you're even more critical when you actually own shares. Now, first thing I want to take a look at here is just a max chart of the company. This goes all the way back to the early 90s, before some of you guys might have even been born. In fact, I was only, I was in elementary school back when this company started trading. But what I want to take a look at is just maybe call it the last, 15 to 20 years of AT&T. Notice this stock trades down to the low 20s, goes up to about 40, goes back down to the mid to low 20s, goes up to about 40, and even in our 52-week range right here, 52-week range is mid 20s at $26, and what's the high? About $40. So that should tell you right there, this stock is extraordinarily predictable. I would definitely look to buy shares down in the mid to low 20s on this stock, and if you want to, I would definitely look to sell in the $40 range. Now, I tend to hold shares of AT&T because it pays a very juicy dividend, at least from interest rate perspective. 6.25% is very nice. Go try to find a bank account or anywhere in the world that's paying this. I doubt you will find one. And so the dividend rate, so they're paying you $2.08 per share. So if you own about 10 shares of AT&T, they're going to give you $20 a year just in dividend. The forward PE is a measly 10. I mean, we've been analyzing stocks where it's like 10,000. So this is a very reasonable valued company. Pays a nice dividend. Again, I know most of you guys are young. You're into the Beyond Meats and Tesla. And by all means, I'm not telling you not to invest in those stocks. But there is room in your portfolio for steady, consistent winners like AT&T, and very predictable. Look how predictable this shares have traded in a range for nearly 20 years. When you start getting to my age, having this kind of predictability with your money is actually kind of nice. Now, let's take a look at AT&T. What do we see going on here? This is loads and loads of debt. If you know anything about AT&T, they have a mountain of debt, and I'll show you here in a minute what it is. But look at these interest rates. These are very, very low interest rates, in my opinion. In fact, if any of you guys want to loan me money at any of these interest rates, I would gladly take it, because this is very little money. You don't have to be a genius to make money when you're borrowing money at that low of a cost. Now, how much debt does AT&T have? Let's scroll all the way down here to long-term debt. Is this $147,000? Is this $147 million? No, this is $147 billion with a B. $147 billion. Can't tell you that I look at a lot of companies with that much debt. And that's just the long-term debt. We've got some short-term debt here that's maturing over the next 12 months. That is at $17 billion. So this is well in excess of $160 billion of debt. Now, let's take a look at the operations of AT&T, because we just saw that they borrow this money at an incredibly low rate. So if they have a good return on capital, it doesn't really matter. It's almost like a house flipper that borrows money to buy a house. As long as they can sell that house within a reasonable time frame and make money on it, borrowing the money is actually probably smarter than outlying their own cash. We'll see if that's something that's going on with AT&T. Now, we have revenues up here, 3 months ended. This is back in 19. This is in 20. You notice here that they did $42.7 billion in revenue in the quarter. But what I want to do is, they don't really break it out here for you. So I'm going to jump down to another part of this 10Q, and I'm going to show you here. Here's the communication segment. So this is your cell phone bill, your internet, things like that. Now, this ticked down 2.6%. It went from 35 billion down to 34.2 billion. Warner Media, this is HBO and other, I think even CNN and things like that. That went down 12%. That went from 8.3 billion. They just bought this, and it went down to $7.4 billion. Latin America went down as well, 7.5%. to $1.6 billion. Now, the rest of this is actually very little in comparison to the $42.8 billion of revenue. So while Xander went up 14.8%, $490 million is a rounding error when you make $42 billion in a quarter. So now this was revenue. Now this is operating contribution. I want to say that's another word for gross margins. Here's some interesting things. So we saw that communication went down 2.6% on the top line. The bottom line, or kind of the gross margin line, actually went up 2.4%. So they've got some efficiencies in the communication segment. So you like to see that, especially in a mature business. Warner Media went down 12% revenue. Ooh, but look at that gross margin went down 20 to 25%. That is not good. Latin America also went down about 6%, and the rest of this, again, is not a big deal. $42.8 billion in revenue in the quarter. We'll consider this a gross margin of about $10 billion. Now let's take a look at the full picture, because we still have we have equipment costs, we have broadcast costs, we have selling and general administrative costs, we have other operating expenses here. We've got a total operating expenses of $35.3 billion. Again, that's off of $42.8 billion in revenue. So we have operating income of $7.5 billion. So notice that the income, the revenue, went down about $2 billion, but notice that operating income actually went up just a little bit, about $200 million. That shows you that this company is a mature company, very, very well run, at least from a cost perspective, because they were able to decline revenues by a significant amount. $2 billion in a quarter is a lot of money, but they were able to drive some efficiencies on the cost side. So you like to see that when the company has mountains of debt, that they're able to, you don't want to see revenues decline, but if operating income stays the same or goes up a little bit, that is a positive sign. Now let's come down to the net income here. We've got a $4 billion net income. And again, revenues went down, but net income actually went up by about $500 million. So that is a positive sign if you're a holder of AT&T shares. Last thing I want to make you note of is take a look at this earnings per share. Normally, I don't look at earnings per share, but we'll take a look at it here because, like I pointed out, this company pays a $2.08 per share dividend. They made 63 cents per share in the quarter. Let's just annualize that out and call it $2.40 or so. Look at that. This company earns, we'll call it $2.40 per share in a year, and they're paying you $2.08. That's why I like owning shares of companies like AT&T, because you are actually treated like an owner. This company made $2.40 per share, and they paid you $2.08 per share. Guys, that sounds like a heck of a deal if you ask me, at least from a dividend perspective. Now, let's move down to the balance sheet. Like I talked about, they have $160 billion in debt. Do they have enough cash to cover that? Absolutely not. Take a look at this. They had, back in December, they had $12.1 billion. Now they have about 10. So it went down. That's not good. Here's accounts receivable. This is like people that need to pay their bills and things like that. There are some doubtful accounts here, about $1.5 billion. That went down a little bit. You can kind of consider some of this cash, but not all of it. We'll just say this company has a cash and cash equivalents of about $25 to $30 billion. Again, they have $160 billion in debt, so they don't have nearly enough cash on the balance sheet to even come close to paying off their debt. Even their short-term debt is not even, they don't even have enough money in the bank right now to pay off the $17 billion that they owe on short-term debt. So where is some of the assets of this company? Where do they lie? A lot of it's in this property, plant, and equipment. Again, you know this company very well. This is a company that has phone lines and infrastructure all across the United States and in Latin America as well. So this is valuable, because if this company had to go bankrupt and had to liquidate, there would be companies out there that would try to scoop this up, and maybe even the government themselves would scoop this up. So there you go. That's where the bulk, if you look, here's our total assets here, $540 billion. The vast majority, over half, is in this property, plant, and equipment. So if you're investing in AT&T, you're not getting a lot of cash on the balance sheet. You are getting a lot in returns of profit. Any profit this company makes, they're almost returning a lot, almost all of it to you. And you're investing in this plant and property and equipment. And since this business is allowed to run like a quasi monopoly, there's only like 3 or 4 competitors, at least in the cell phone space that they're in, then this property, plant, and equipment is worth something, and it's very valuable. Now, again, moving through the balance sheet, we do have this $147 billion in debt. We've got this $17 billion in debt here. We've got other payables and things like that. Whoo, man, this is a mountain of debt. But again, if this company can manage it, can continue to churn out a little bit of profit and then start to pay this down, I think you could see shares begin to trade up to the top end of the range. Now, what you want to do when a company has lots of debt, you might be wondering, well, how do I analyze how they're paying for it? You come to the cash flow statement. This will be the last thing we analyze here. We've got 3 months ended here, 19 and 20. So your operating activities are always first, and you can see net cash provided by operating activities went from 11 billion down to 8.6 billion. So we shedded about call it $2.2 billion of operating income. That is not really a good thing, but as long as if this can start to stabilize a little bit, you would like to see this trend back up. Now we have investing activities. This is like purchase of plant and equipment. So notice this company is consistently investing. This is almost an identical number. So they're investing quarter over quarter. It looks like close to $5 billion, at least over the last 2 quarters, they did that. So they invested about $5 billion into their business. Now you like to see that. Again, we had operating income of cash flows of $8 billion. So 5 of it technically kind of went to investments. Now, here's financing activities. This is where we pay down the debt. So here's repayment of long-term debt here. Notice it was huge. Look at this. This was in the last period. About almost $10 billion went down to $4.4 billion. My guess is they refinanced and they kicked some of it down the road. Now, issuance of long-term debt here. I almost look at this as, look, they issued $9.1 billion and they paid down 9.8. They issued 4.3 and they rebought or paid off about $4.2 billion. What AT&T is doing is essentially borrowing money to pay off existing debt. So it's almost like somebody that has a credit card that has a high interest rate, and then they open another one and do like that balance transfer and have that, maybe have a lower interest rate or consolidate, or maybe a no interest rate. That's kind of what AT&T is doing. They're borrowing money. I mean, this is just, we're kind of looking at this in a bottleneck here, but that's essentially what I'm seeing here. They're borrowing money and to pay out the debt. Now, as long as they're able to do that, this company shouldn't have any problems paying this or servicing this debt. I don't know if you're going to pay it down very much doing these types of maneuvers, but it should keep things rolling for AT&T and AT&T shareholders as time goes on. Now, cash and cash equivalents at the period, notice that actually ticked up to about $10 billion. Some of it has to do with some of these issuance of preferred stock here. Notice they didn't do that here. They did that here. I think that's where you got a kind of a bolstering of the cash balance a little bit from the previous period. So there we go. AT&T, mountains of debt, but there is some upside. They're borrowing a lot of that money at extremely low interest rates. You get a ton of the profits from this company. It is a very predictable company from a cash flow perspective. It's also a very predictable company in terms of share price. Again, this is not like Tesla or Beyond Meat or any of these high-flying stocks, which again, if you're young, certainly you can have room in your portfolio. But I wanted to do AT&T today because I want to show you that sometimes these predictable price swings, this predictable price action can be very, very, very useful in your portfolio as well. So hopefully that helped you guys out. If you have a stock you'd like for me to analyze here on the channel, leave me a comment below. That's how we got AT&T on the channel today. Again, full disclosure, I own some AT&T shares. Hope you guys are all doing well out there. Good luck with your investments. We'll see you guys again soon.